Hey, what's going on everyone? It's Griffin here, and as the title of today's video and the thumbnail would suggest, we're doing something completely different that is brand new for me as well as this channel, and that is an interview with Kevin O'Leary as well as Ben Samarroo, where we sat down and we had the opportunity to speak about cryptocurrencies, decentralized finance, and a couple other topics peppered in between. Now, I'll keep this intro short so we can get right into the actual interview, but a couple things to mention here. This is the first time that I ever do an interview at all. So starting with Kevin O'Leary, a man I've been looking up to and watching on TV for well over a decade now, since the first season of Dragon's Den was just an opportunity that I could not pass up. Basically, cut me some slack on the interviewing skills, but I'm sure I'll get better over time if this is something I do again. So with that said, I hope you enjoyed today's video. Comment down below your thoughts and seriously smash the like button for today's video. With that said, let's jump right into it. All right, hey everyone, welcome back to the channel. In today's video, we have the honor of welcoming Kevin O'Leary, Shark Tank, and needs no other introduction, as well as Ben Samarroo, who's the co-founder and CEO of a new crypto platform called WonderFi. So welcome. Thanks a lot for taking your time out of your day to come on my channel and talk to me in the audience. Yeah, so let's get right into it. I'll start with you, Ben, since for my audience, you're more of a new face here. Tell us a bit more about yourself, your background, and really why you chose to pursue a venture in the decentralized finance space.
You bet. Yeah, it's great to meet you. Thanks for taking the time to chat with us.
Sure.
So my background, I'm actually a recovering securities lawyer. So I practiced law for about 5 or 6 years at the start of my career, helping companies raise capital, go public, and mostly in the oil and gas sector. So I was living in Calgary, and then in 2016, I decided to move to Vancouver to get more involved with technology companies, and that's when I discovered Bitcoin, and and then everything changed from there. Basically, no looking back. The rest is history. Yeah, it was just kind of a great kind of turn of events, and so being a lawyer at that time, I saw a lot was happening in the space, and so I got involved with advising some of the first crypto projects in Canada and the US. And so there's some like super interesting stuff going on at that time. And and then from there, just sort of saw the potential of crypto and got out of legal practice and more into building products and really just trying to bring more users into the space. I think one of the things I noticed really early on is it doesn't matter when you get into crypto, somebody's always going to be like talking about, oh, I've been in the space for, sure, 2 years or 3 years or 4 years or 5 years. And it's kind of really, I think it's really, it can be a pretty insular kind of space. And I think the, whole purpose is really meant to be inclusive and like accessible to everyone. So I've just been like my focus and career in the crypto space has really been trying to bring more users and people into the space.
Awesome. So great, strong background in crypto. And on that, like in that vein, can you explain a bit more WonderFi, really what this new platform is about? Because it's completely new, especially to my audience as well.
Yeah, absolutely. So it's the decentralized finance or DeFi area is definitely the highest growth sort of space within DeFi, and we've seen like over the last 18 months or so a lot of activity. A lot of it's focused around decentralized lending and decentralized exchanges, but there's a lot of different applications. It's really like people are excited about it because it's the future of finance. It's sort of everything that that we could have dreamed of back in 2016 and 17 for those of us that were in the space at that time. Like a really great application of smart contracts and more efficient, faster, cheaper transactions in a lot of ways. But one of the things that we've seen, and I think for any of your audience that has played around in DeFi will be able to attest to, is it's overwhelming to go into DeFi and try and figure out like,
yes,
what the hell's going on. So we really look at this from a entry-level user's perspective. How do we simplify this as much as possible and just lower the barrier to entry? So it's all about simplifying and creating better access to DeFi. So WonderFi plugs into kind of the best functionality that we see in DeFi and that we think users should have access to, and then and we really just streamline that process for them.
Awesome. So, Kevin, I'm assuming the reason why you're wanting to get involved more in a decentralized finance, by the way, DeFi is decentralized finance for anyone who wasn't following that. Reason why you wanted to get into that is most likely just because this is such a new space. And really, I saw online you were saying that prior to higher levels of compliance and stuff, it was kind of harder for you to get involved in this space. So could you speak a bit more about really what your motives are right now about getting into crypto while it's kind of booming? And well, yeah, I'll let you answer that for sure right now.
It's true, crypto is booming. There's no, and it's particularly getting a remarkable amount of time in social media and the press for good and bad reasons. I mean, there seems to be a desire by the popular press to vilify the participants in crypto and pit them against regulators all around the world, and that's simply not a fact. It's great, fake news, but it's not the reality. Decentralized finance. The potential of it is to make the financial services industry far more efficient and less costly to transact in. That's the baseline by which there's so much interest, and why certainly I'm involved. But most of us that are participants that are already involved in financial services have no interest in getting involved in crypto against the regulator. We want the regulator to regulate it like all the other products and services that we're involved in. So that's the overview. But let me give you a use case that I've just lived through over the last year that makes me highly interested in getting much more involved in crypto and decentralized finance. We reduced our holdings in commercial real estate over the last 18 months in our operating company's portfolio. It was over a third, and now it's down to 8%. That generated a lot of cash. And traditionally what we would do is go to cash desks that we work with and look to put that money to work in short duration fashion. We were offered 21 basis points of interest, 21 basis points. Inflation is currently around 2.1%. So effectively, we're going to be losing 2% of the buying power of that cash every 12 months. That is not acceptable. And so that forced us to go and look at alternatives in the DeFi space around the ideas of stablecoins that we could stake or lend and garner, theoretical interest rates of 3.8 to 5.2% based on 30, 60, 90-day contracts, which is what we attempted to do. Now, when I say, attempted to do this, we can't do that without being compliant to our internal compliance, our external auditors, and our reporting to regulators. It took me months to set that up, almost 6 months plus 3 new hires just to get that done at an operating company level so that I could be compliant and I could structure this in a way that was compliant. Now, it was incredibly hard to do. So if you think the average person that's why I invested in WonderFi. I'm really interested in creating an app for people. So if my daughter wanted to put $14,000 to work in a staking program, she's not going to do what I went through. And she also has to be compliant. She also has to be able to report her capital gains and her interest to tax authorities. And the trouble with the crypto space today is there is no infrastructure for compliance. And so that's what WonderFi is attempting to do, is to provide all of those services, make it easy to use, consumerize it, commercialize it, make it a platform anybody can use, and above all, be compliant with tax authorities.
Yeah, so there's a couple of things to unpack there that my audience might need some more context on. First and foremost, could you explain a bit more the idea of a stable coin, and then also the process of staking to incur interest on those amounts? Because right now, for sure, we're seeing a level of interest on high interest savings accounts pretty much is null. And the idea of putting money into the equity markets right now, especially when people are trying to save money, is on a shorter term basis, isn't necessarily the best option for some of my audience members who have asked me. So yeah, really, how does that work for staking, and how can someone ensure that they're going to, like, is someone incurring interest on their amount deposited, or how does that work, like for stability in terms of, because there's so much volatility right now in the crypto space, and that's what a lot of my audience members are weary of, and that's why they're staying out of the crypto space.
Yeah, and they should be. I mean, there's nothing wrong with scrutinizing, and I'm not telling anybody to put all their money into crypto. I certainly don't do that,
Sure.
But I have increased my weightings, and I'm going to continue to increase. I originally had a target of 3% in crypto, and I think we'll probably be close to 7% by the end of the year in the operating company. But having said all that, let's talk about stablecoins. The concept of a stablecoin is to build a coin that is backed by a stable currency like the US dollar, and that's what DAI and the USDC does. Now remember, these have been very controversial of late because the regulator, think about a money market fund. That's a regulated entity. When you put your money into a money market fund at $1, there's a bunch of instruments inside of that. There might be short-term treasuries. There might be other things that the regulator looks at, and you have to report on it. But stable coins are not regulated yet the same way. And so the regulator has gotten very concerned about these because they've grown from a very small amount. USDC is over $30 billion now. And so there's lots of interest in it. And so you have to think of it that way. It's a coin that theoretically is backed by the US dollar. And that's why the regulator is taking an active interest in it. And, there's been a lot of controversy around Tether, and all of this is out there in the market. It's, being debated out there every day. And so the idea, and here's how you stake it. If you take $100 US and buy USDC with it, you can then write a contract for 30, 60, 90 days or longer and stake it, or in other words, lend it out for yield in USDC. So maybe you're going to make on an annualized basis of 5% paid back to you in USDC. You can take that USDC, convert it back into US dollars, and that's what some people are attempting to do. Now, I'm not telling you that's easy. It is not easy to do. It's very complicated, and the average person is never going to do it, and I talked about that earlier. The whole concept of WonderFi is to allow, that's one use case, and the whole idea of decentralized finance with WonderFi is to allow you to do that in an easy fashion that's transparent and allows you to report your taxes. Because when you make that interest, if you want to call it interest, of that 5% in USDC, that's something you have to report to the regulator, to the tax authorities, and you need reporting standards to do that, and that's what WonderFi is attempting to do.
Awesome. Yeah. So I looked over, obviously, WonderFi, what the use cases are supposed to be, and some of the products that are upcoming. So let's speak about some of those quickly. First of all, there will be a high interest savings account. So Ben, maybe you can speak a bit more about that. So a user comes in, deposits, let's say $10,000. What could they expect from that type of account?
Yeah, so really what we're doing is just, again, providing better access to the most high value things we see within DeFi, and then also I should kind of clarify, and it's helpful for me to kind of hear where your users are at with crypto and kind of what's keeping them out of the space. I think that's like super insightful. So one of the things we're really focused on is curating the experience, so we're keeping people away from a lot of the more experimental stuff that's going on with DeFi, some of the more high risk assets, because I think if you read the headlines, you'll see like there's hacks that are happening where customer funds are being lost, and issues like that, which are not great for the space. But a lot of that's happening on these really experimental kind of protocols, and so there are other protocols which are audited, tested. They've had billions of dollars of transaction volume go through them, like Compound, for instance, which is one of the most popular lending protocols. And so what we're doing is we're steering users towards those avenues, because we see them as being more suitable for somebody that's entering the space for the first time. So on the sort of savings like earn product that we have, it's really enabling people to earn on their assets through Compound, and so like for users that are new to the space, some might not even be comfortable with the volatility of like ETH or Bitcoin or some other crypto assets, and so having something like USDC, you asked about the concept of a stable coin. It's a crypto asset, but it's tied to the value of the US dollar. So if the US dollar goes up, or down, it just tracks that. It's not something that's going to change with the price of Bitcoin. So like we see that as, so go ahead.
So like someone's not going to deposit $10,000, just for more clarification in my audience here, someone wouldn't deposit $10,000 and then that $10,000 is highly exposed to the fluctuations of Bitcoin, for example.
Exactly.
Okay.
It's not at all, and it's just tied to the value of the U.S. dollar,
Okay.
and so USDC was created by Circle, which is a company that's been doing a lot of great stuff in the space, and you know, we're kind of partnered with them to offer that product through our platform, and so I think, to me, that's such a good entry point for people, because you get to understand what it is to own and control a digital asset. You're not exposed to the price volatility, and like to Kevin's point, you can earn interest on it. So I think
Yeah.
that's why that USDC, which is the stable coin, that sort of application is such a good entry point for people that that are being kept out of space. And I would be super curious to also hear, like, from from your audience around, like, what other thing, and I don't know if you have this feedback already
Sure.
from other conversations you've had, but like, what else is keeping them out of the space? Like, because I think one of the things that I've discovered from talking to a lot of potential new users into crypto and DeFi is it really is that there's so much information, like it's too overwhelming for them to kind of come in.
Yeah, I mean, right now, especially so many people, we have so much access to information about their various different investments and stuff like that. And I think it's really just more or less the volatility and the fact that most people still to this day, there's a lot more information about decentralized finance and crypto, but it's still quite unknown. So Kevin, you're pretty strong in the world of indexing though. And I see that WonderFi is coming out with a crypto index essentially. So is this going to be composed of, for example, some of the top coins, or what can we expect from something like that?
Well, that's a product decision I'll let Ben talk about.
Sure.
I think that it's important, but I think exposure to just overall as an investor, many people don't yet know how to get exposure to the crypto markets. I mean, I know there's a lot of excitement out there, but I want to, point something out. Much of what's going on in crypto is happening at the individual level, or at the hedge fund level, or the high net worth level, or the family office level. It is not happening yet at the institutional or pension or sovereign fund level. Those customers that I know through my work in indexing have told me there's great interest in allocating to crypto, but no compliance infrastructure that allows them to do it. They have compliance committees, they have compliance departments, they have regulators that oversee them. And so the way to look at this is, it's so nascent, it's so early, that if you believe that there's a future of decentralized finance and cryptocurrencies, which I do, you have to make that binary decision. Either you believe it or you don't. There's no, in my view, it's a personal opinion, I'm not telling people what to do, but I see no reason in my own personal position not to get some exposure while this grinds through the global compliance regulator in every geography. And I think over time, because of the really persuasive argument of reducing fees, transparency, and speed of transactions in just the payment systems and the global currency markets, there's so much potential. I'm a believer in it, so I see no reason not to participate. And it's, in terms of using WonderFi to get that exposure, I'll let Ben answer that.
Yeah, so I think we look at it just like, traditional investors. We're trying to look at it through that lens. So there's, traditional investors, like, that want to be able to buy individual assets and get exposure and pick and choose. And then there's others that just want to enter into a market and get, broad exposure through an index. And so I think that's a really important point, and kind of learning from the traditional markets that we're taking, and then kind of applying into WonderFi. There's always going to be people that just want to, in one click, get access to the top 10 assets that are driving a lot of value in the DeFi space. And I think that's also a very good entry point for new users. I think for anyone that's been in the crypto space during the last 5 years or so, you'll know that there was a lot of hype around, different coins back in 2016, 2017, followed by a big crash where really the only things that survived in a meaningful way were Bitcoin and ETH. And that's because there's real value behind those assets. It's digital gold, and it's programmable smart contracts. And so I think there's a lot of, excitement about crypto and DeFi again now. And so I think for people that are looking to get into the space for the first time, the same principle should apply. It's like, where is their actual value? To me, that's like a really good place to focus.
Do you, Kevin, think that once there is a lot more regulation and compliance around this space, do you think we'll continue seeing the same level of volatility in, let's say, Bitcoin and Ether, up 30% in a day, down 30% in a day? Do you think that's something that would continue or would kind of stabilize out a bit more over time?
No, I think these products are nascent. They're very, very early. I think they're very, very volatile. If you're getting involved in owning Bitcoin and ETH. The thing I would point out, though, and certainly I've expanded my holdings a lot, owning cryptocurrencies is beyond just Bitcoin and Ethereum. There's so many other projects going on in level 1 blockchains and level 2 blockchains and all kinds of tokens and coins that are very interesting projects. It's specific to different markets, and even the NFT market that's emerging. I want much more exposure to that too, and so volatility will remain. And you're very astute to point that out until this thing becomes more of an institutional product, because institutions allocate 1%, 2%, 3% to portfolios. And they don't day trade it. That's not their interest. They own, I'm speculating when I say this, but many of the people I talk to, they're institutional owners, treat Bitcoin as a property, no different than real estate. So they're interested in owning a building in Boston, or maybe 1 or 2% holding of a Bitcoin that they can find that's mined ethically and mined sustainably. That's another problem that the industry is facing, but I'm sure will resolve over time. But they're going to hold it for the long term. And so, my plan and what I'm planning, my strategy with this is I'm going to disclose my holdings after I've, I don't want to be accused of being somebody that buys some illiquid coin and promotes it. And, that's not my interest in this. I'm going to say, look, here's what I own. And I think by the time I finish, collecting these positions, there'll be about 20 or maybe 25 of them. And I'm going to be an investor in these for the various reasons. And I hope it creates a dialogue of the pros and cons of owning these different coins, tokens, positions, blockchains, level 1s, level 2s. Because I've been working very hard in terms of understanding which of these spaces I want to be a participant in. And so, people call me all the time, are you going to own any Dogecoin and all of this stuff? I'm interested in things that have a very long-term digital potential, and that's what I'm going to do. And I'm very interested in being part of the community, and I certainly am now. And I'm a big advocate for this. But above all, my number one thing, if there's anything I want to talk to crypto, is I think the real potential is getting the regulator to regulate it. And I want that to happen, because that will open up the floodgates of institutional capital that will create a lot of value for everybody. And therein lies the challenge. I think the regulator is doing a great job, obviously at different speeds and different geographies. Canada is different than Switzerland, different than Britain, Australia, New Zealand. And here in the US, where everybody's debating when this is going to be regulated, and the regulator is making a lot of communications about their focus on this. They're going to get it right, and they are the lead regulator globally. So we want them to get it right and encourage them to do so. So I think these are very exciting times.
So a platform like WonderFi that's going to have a certain amount of coins available, and it will all be regulated and fully compliant. Right now, I was looking on CoinMarketCap this morning. There's over 12,000 different projects that someone can possibly buy. It's crazy. So at that point, when and if, we don't know right now, there will be compliance. Let's just speak United States for now. Will any of these other coins trading of that essentially not be tolerated or allowed? And or any platform that does allow the trading of those, let's say, non-regulated coins, will that be something that's tolerated, or how do you see that working?
Well, the way I look at it is a regulated coin is going to be worth a lot more to an institutional investor than an unregulated one. So of the universe of 10,000 plus coins, if the regulator starts to regulate, for example, stablecoins, and says this one is compliant and this one isn't, that in itself creates a lot of value. And so I don't see a world 5 years from now loaded with unregulated, digital tokens and coins, because the demand for those is going to be a fraction of what the regulated coins would be. And that goes for every geography. The real potential here is to get global regulators in every market. Let's start with Asia, Europe, North America, to say, let's just pick one stable coin and make that a payment system. Can you imagine the savings that we could do in just buying and selling in different currencies like the Swiss franc, the euro, and British pound, or the US dollar, which I have to do anyways because I'm an investor in those countries and I want to own those stocks in those domestic markets. Well, I get clipped every time by FX traders on both sides of the trade. Very, very inefficient, really slow, very expensive. The potential of decentralized finance to clean all that up is so big that's why I don't think it's ever going away. This is innovation in technology and financial services, the biggest market in the world. The potential is massive. And I just think what we're waiting for is regulators to regulate. And I'm willing to wait because I know they know the potential is great for this innovation. And I think it's a very exciting time. I've said it before, I'll say it again, to be an investor in digital. It's a binary decision. Either you believe in it or you don't. There's many skeptics. I totally appreciate that. I am not one of them.
Okay, so for global compliance then and regulation, it really comes down to a stable coin being accepted in North America as well as, let's say, Europe, these countries partaking in a single stable coin, or it has to?
Well, no, they could be multiple coins. Okay. It could be multiple, stable coins. Maybe each country has its own stable coin. I don't know.
So that could be a possibility as well.
Yeah, I mean, anything's a possibility, but the core theme here is compliance in a regulatory, governance by regulation, because that's the only way you're going to get institutional money. There are no cowboys. This dialogue that's occurred, it's the popular press wants to say that Kryptonians or the founders of cryptocurrencies want to wage a war on regulators and never want to be regulated. That's not true. That's just simply not true. The crypto community wants to work with regulators so that they can become an institutional product, because that's where the real capital is. And so that's really the challenge and the opportunity in today's digital markets.
Excellent. So Ben, right now, utilizing crypto, I hold some various different coins and such, but actually using those on a day-to-day basis is, of course, not something that I'm doing. Not many companies accept it or anything. When do you think there could be a possibility for this becoming more of a used currency in the day-to-day transactions of most people? And right now, transactions for doing that are also extremely high. So yeah, when do you think we could see an outlook for that?
Yeah, I think it's going to take definitely more adoption for us to get to that stage where we can see payments on a day-to-day basis through crypto. I think if we rewind a few years, the expectation was that Bitcoin would be the new form of payment, and obviously that dialogue has changed a lot. I think it's pretty universally accepted now that Bitcoin is a store of value. Like Kevin said, it's property that investors want to hold. But there are other kind of assets in the space, I think, that provide that have lower transaction costs, or even things like Lightning Network on top of Bitcoin that does bring down the transaction costs and make it more realistic to use that as sort of a day-to-day payment. But I think we're going to need to see more adoption. Like, I think the stat right now is, I think, around 1% of the global population has owns or holds crypto. So I think we're going to need to see that number go up significantly. Again, a gating item for that is regulation, not just like institutions for sure, which Kevin's talked about. And then also, I think a lot of users, retail that we talk to, regulation is something that they see in the headlines all the time, right? It's like, China crackdown, SEC, and so on and so forth. And so I think that does also keep retail out of the space. Not early adopters. Like, early adopters are in regardless of what the regulators are saying, and they're have been in the space for a long time. But I think for kind of the next part of the market segment to come in, that the market needs to mature quite a bit more. And I think that's really through aside from regulation, there's also education that needs to be done. Like, I think it's great, like, people like you being able to have a voice and sort of share some of the barriers and opportunities and things like that for people getting into the space. I think it's super important. So it's not just crypto cowboys that are saying, hey, this is the future, the only way to go. It's like there needs to be a good kind of informed discussion about it.
Great. How much time do we have left? Because I have a couple more questions I'd like to run by you, Kevin.
I could do another 5 minutes.
Okay, awesome. Most of my audience is between the age of 18 to around 35. And then I do also have some older individuals. Typically speaking, as people get older, they start allocating a bit more of their portfolio towards fixed income, things of that nature. Do you think that moving towards retirement, do you think that an individual who is, let's say, 40 or above right now should wait to utilize a product like an index or maybe even use a high interest account like that to gain diversity towards cryptocurrency? Or should they potentially even just buy coins specifically like Bitcoin or Ethereum?
Well, the mantra that I've lived by that's really saved me over the years through volatile markets is the idea of diversification. Everybody defines that in different ways, but my mother taught me a very basic metric that I've still used today. I never have more than 20% in any one sector of the economy. And there's 11 sectors, including real estate. And I'd like to argue, it doesn't exist yet, but over the next decade, cryptocurrencies will become the 12th sector of the S&P. It's my own personal idea is you never have more than 20% in any one sector and never more than 5% in any one stock or bond. So, you could apply that to crypto as well. And so for me, getting exposure to crypto, if I'm successful by the end in our operating company portfolio, get to 7%, that will be made up of a large portfolio of different cryptocurrencies, tokens, coins, level 1 projects for new chains, level 2 projects, just a really diverse portfolio. And as I mentioned earlier, I will disclose that when it's built. So that hopefully we can have a dialogue with people that are interested, because I'm certainly getting questioned every day what I own. And I find distasteful this idea that people, create these liquid coins. You talked about 12,000 coins. Well, the majority of those are never heard of, and somebody's trying to go online and promote them, which I just find distasteful. I won't participate in that kind of thing. But the whole binary decision for anybody that's 18 to 40, if that range of your viewers, is to make that decision in the fork in the road, the binary decision. Am I going to participate in cryptocurrencies or not? Yes or no. It's a simple yes or no. And if the answer is yes, diversification, in my view, is what you want to do. You don't want to just own Bitcoin, just own Ethereum. There's many other ways to do it.
So it really comes down to personal preference of, well, not preference, but idea of if you believe in the space or not. Awesome. All right. And one last question. I had a couple people ask me specifically for this interview, whether or not right now we're talking about how crypto, specifically Bitcoin, is like gold 2.0. Do you think that physical gold still has any place as a hedge against inflation when we have options like crypto? I had a couple people ask me that.
Yeah, and I get asked that every single day. I still have a 5% weighting in gold, and I pay for storage of gold bullion, and I also use a couple of ETFs to rebalance the 5%. But, as I said earlier, crypto will probably ellipse that in terms of size of portfolio weighting, because I'm starting to view crypto as a sector. It's on a personal opinion. Gold is a 5% weighting as an asset. It's not easy to stake gold or make interest off gold. It's just a hedge against inflation, in my view, and it's been around since the 2,000 years. The Romans used to hoard it, so I have no intention of dumping it. It's just going to remain there. And we're so early in crypto, but I view crypto as a productivity tool. Bitcoin is an asset like real estate, but level 1 blockchains, those are productivity tools. I'm going to be working in the watch industry, creating NFTs for watches so that I can have authentication associated with my watch pieces. So there's so many different use cases. For me, it's a very exciting time, and I just want to be an investor in it. And not everything I'm going to invest in is going to work, obviously, but I have multiple investments, and I probably spend 60% of my day looking at new crypto or blockchain or smart contract opportunities in just deal flow. It's an incredible time. It's like the dawning of the internet, except in a whole new space. That's the way I view it.
Awesome. Yeah, I really appreciate the both of you coming on my channel today and sharing your knowledge about WonderFi, DeFi, and a couple other questions we had. So thanks a lot. Hope everyone enjoyed today's video, and I'll see you in the next one.
Take care. Thank you for your time.
Griffin.
Bye-bye.
All right, everyone, that wraps up today's interview with Kevin and Ben. I really hope you enjoyed it and I provide you some more value and context about the decentralized finance space. If you did enjoy it, you know what to do. Make sure to smash the like button and also share it with someone else who might benefit from today's content. I was really glad to be able to unpack some of these topics around decentralized finance as well as crypto, which I know a lot of the audience members were asking me to cover in my video. So again, hope that gave you some context and also provided you some better understanding of how crypto and DeFi could overall just incorporate into the average individual's portfolio. So yeah, with that said, let me know down in the comments if you would like me to start incorporating more crypto content on a more recurring basis on the channel. And with all that said, thanks for watching and I'll see you in the next one.